Hello.
I keep pressing. Mic check, mic check, mic check. Hello, testing. Maybe the volume. Volume can be a little bit more. Test, test, mic check, mic check. One, two, three. Mic check, one, two, three. Mic check, one, two, three. Mic check, one, two, three. Yes. Testing mic. Testing.
Semua sempit, masih gini-gini, sesingkit singkit.
Because he said he's worried.
It's gonna be so delayed. I understand, but I stand by Sarai just in case.
The winner of the Gig Master Competition 2019 goes to
Let me check
G4 M
announce when.
5.
As we move into the digital economy, the digitization is very much part of our daily life now. And digitization means new ways of doing work. So by having this initiative, we hope to inspire students that they can be their own entrepreneur by conducting their business online and learn from the best e-commerce platform, Lazada.
Pendekatan yang diadakan oleh IT College dan juga Lazada merupakan satu pendekatan yang sangat produktif yang mana masyarakat ataupun khasnya para belia yang berkunjung pada hari ini dapat didedahkan bagaimana mereka harus menceburi bidang e-dagang ini. Apakah pendekatan yang sesuai dan apakah juga produk yang sesuai mereka pasarkan secara online sama ada melalui Lazada dan juga sebagainya.
Learning more about online business not only helps us understand the boundaries and the complexities of online business. I feel like being in an online business not only benefits myself but others as well, because it's about fulfilling the needs and wants of other people, and I feel like if I were to become one of the online businessmen, I feel like I can help even more people out there.
From JobStreet's 2019 survey, it is found out that digital talents are employers' top priority. E-commerce was also reported to be one of the top 5 core work-related digital skills sought after by employers. This initiative will nurture existing digital talent and hone budding one for Malaysian employers. Well, it is extremely important as e-commerce is the way of the future.
Mic check, 1, 2, 3. Ladies and gentlemen, may we have your attention, please? We will be a little bit delayed, right? So please feel free to go to that side of this hall, okay? And then to enjoy a light refreshment before we begin the event. And be sure to be here about 8:55. Okay, so there are some light refreshments just beside this hall. Feel free to go, okay? Yes. We will start again. We will try to all be here by 8:55. Thank you.
The winner of the Gig Master Competition 2019 goes to G4 M 5.
As we move into the digital economy, the digitization is very much part of our daily life now. And digitization means new ways of doing work. So by having this initiative, we hope to inspire students that they can be their own entrepreneur by conducting their business online and learn from the best e-commerce platform, Lazada.
Pendekatan yang diadakan oleh IT College dan juga Lazada merupakan satu pendekatan yang sangat produktif yang mana masyarakat ataupun khasnya para belia yang berkunjung pada hari ini dapat didedahkan bagaimana mereka harus menceburi bidang e-dagang ini. Apakah pendekatan yang sesuai dan apakah juga produk yang sesuai mereka pasarkan secara online sama ada melalui Lazada dan juga sebagainya.
Learning more about online business not only helps us understand the boundaries and the complexities of online business. I feel like being in an online business not only benefits myself but others as well, because it's about fulfilling the needs and wants of other people, and I feel like if I were to become one of the online businessmen, I feel like I can help even more people out there.
From JobStreet's 2019 survey, it is found out that digital talents are employers' top priority. E-commerce was also reported to be one of the top 5 core work-related digital skills sought after by employers. This initiative will nurture existing digital talent and hone budding ones for Malaysian employer. Well, it is extremely important as e-commerce is the way of the future.
happy.
The winner of the Gig Master Competition 2019 goes to G4M5.
As we move into the digital economy, the digitization is very much part of our daily life now. And digitization means new ways of doing work. So by having this initiative, we hope to inspire students that they can be their own entrepreneur by conducting their business online and learn from the best e-commerce platform, Lazada.
Pendekatan yang diadakan oleh IT College dan juga Lazada merupakan satu pendekatan yang sangat produktif yang mana masyarakat ataupun khasnya para belia yang berkunjung pada hari ini dapat didedahkan bagaimana mereka harus menceburi bidang e-dagang ini. Apakah pendekatan yang sesuai dan apakah juga produk yang sesuai mereka pasarkan secara online sama ada melalui Lazada dan juga sebagainya.
Learning more about online business not only helps us understand the boundaries and the complexities of online business. I feel like being in an online business not only benefits myself but others as well, because it's about fulfilling the needs and wants of other people. And I feel like if I were to become one of the online businessmen, I feel like I can help even more people out there.
From JobStreet's 2019 survey, it is found out that digital talents are employers' top priority. E-commerce was also reported to be one of the top 5 core work-related digital skills sought after by employers. This initiative will nurture existing digital talent and hone budding ones for Malaysian employer. Well, it is extremely important as e-commerce is the way of the future.
Mic check, 1, 2, 3.
Yes. He's giving the photo. Okay. Yeah, please tell. Please.
So now Dr. Singh is ready. And there's no Nagaraku and all that.
None.
Okay.
Ladies and gentlemen, may we have your attention, please? My name is Deborah, and I'll be your MC today. To ensure a smooth event, we request everyone present to switch your smartphones to silent mode and do accept your phone calls outside the auditorium. Your cooperation is highly appreciated. We begin in a few minutes, so please do take your seats. Ladies and gentlemen, we will now begin our event. Yang berbahagia Datuk Chong Hon Len, President of the Board of Governors of Institut Sinaran and Inti College Sabah. Yang berusaha Mr. Fong Tet Kong, First Vice President of the Kota Kinabalu Hakka Association. Yang berusaha Dr. Andrew Sim, Event Organizing Chairperson. Yang berusaha Mr. Michael Chin, Chief Executive Officer of Institut Sinaran. Yang berusaha Ms. Rosalind Chua, Campus Executive of Inti College Sabah. Yang berbahagia Datuk Goh Chi San, Managing Partner of Ernst & Young Tax Consultants, Sendirian Berhad Sabah. Invited delegates from the Kota Kinabalu Chinese Chamber of Commerce and Industries, members of the Board of Governors of Institut Sinaran and Inti College Sabah, our wise speakers, our gracious sponsors, invited guests and industry players, Datu-datu, datin-datin, ladies and gentlemen. Good morning and welcome to the Ernst & Young Budget Talk 2023. Today we're delighted to have the opportunity to discuss the importance of budgeting for your business alongside experts in the field. Let's give a round of applause for the event today. We will now invite the organizing chairperson, Yang berusaha Dr. Andrew Sim Yisheng, to present his welcoming speech. Yang berusaha Dr. Andrew Sim, please.
Okay. Yang berbahagia Datuk Chong Hon Len, President of IS, Board of Governors, Mr. Fong Tet Kong, First Vice President of KK Hakka Association, Mr. Michael Chin, Chief Executive Officer of IS, Ms. Rosalind Chua, Chief Executive of Inti College Sabah, Datuk Goh Chi San, Managing Partners from EY, Ms. Linda Kwan and Mr. Chua, Ming Hui, speakers from EY as well, Datuk, Datin, ladies and gentlemen, staff and students of Institut Sinaran and Inti College Sabah. A very good morning to all of you. I am Andrew Sim, your organizing chairperson today. Welcome to this morning's event, which is Ernst & Young 2023 Budget Talk. First of all, I would like to extend my sincere gratitude for the sponsor and support from the associations and business such as Professor Datuk Fu Ngiki, Founding President of SME Sabah, Mr. James Ha, President of Federation of Malaysian Manufacturers Sabah, Mr. Yap Chimbun, President of Sabah Employers Association, Mr. Vincent Lau, President of ACCA Sabah, Ms. Sharon Chong, President of Sabah Sung Sing Alumni Association, Mr. Brett Chua, President of Deputy President of Sabah China Chamber of Commerce, Mr. Ng Wei Chuan, Vice President of Federation of Sabah Industries, Ms. Xiao Sui Lan, Director of Women Division of KK Hakka Association, Mr. Jackson Fan, General Manager of Old Town Sdn Bhd, Mr. Chow Man Kit, Partner in PKF Private Limited. With your generous support, we are able to hold this event smoothly. So once again, thank you everyone. And secondly, I would like to thank all our Institute Sinaran and Inti College Sabah staff who are working very hard to make this event successful. In today's event, our focus is on the budget proposal 1 and 2 to be delivered by Ms. Linda Kwan and Mr. Chua Ming Hui, our professional speakers from Ernst & Young. I hope this talk will give us the latest insight into the new proposed budget 2023 measures table on 24th February this year. Lastly, I would like to encourage everyone here to participate actively during the Q&A session later. Thank you and have a great day ahead. Thanks.
Thank you, Yang Berusaha, Dr. Andrew Sim. Before we begin, we want everyone in the room and anyone watching on live stream to remember that there is no one right way to run your business. You should find the right method for your situation to maximize profits without excessive expenditures, which is the subject of this talk today. Ladies and gentlemen, we will now proceed to the budget talk. Okay. Before that, I will introduce our speakers today. Our first speaker, Ms. Linda, is an East Malaysia tax leader and partner for Ernst & Young and Ernst & Young Tax Consultants Sendirian Berhad, regularly speaking at client training sessions, annual Ernst & Young budget seminar, as well as various other seminar and conferences. Ms. Linda began her professional career with Ernst & Young in Kuala Lumpur and has over 20 years of experience in Malaysian taxation. The focus of her practice is on tax compliance for local and multinational organizations across a wide range of industries, as well as tax consulting services for clients in Malaysia. Following the reintroduction of the Sales and Services Tax (SST) in Malaysia, Ms. Linda has assisted clients in the transition from the Goods and Services Tax (GST) to the Sales and Services Tax (SST). Additionally, she assists Ernst & Young clients in Malaysia with transfer pricing matters. Our second speaker, Mr. Chua Ming Hui, is a partner for International Tax and Transaction Services for Ernst & Young Tax Consultants Sendirian Berhad. In addition to tax compliance and tax advisory, Mr. Chua specializes in group structuring and reorganization exercises, inbound and outbound investments, and tax incentives. His client portfolio includes several conglomerates, real estate companies, automotive companies, semiconductor companies, sovereign wealth funds, and government-linked companies in Malaysia. Mr. Chua joined the Malaysia Tax Desk of the Ernst & Young Global Tax Desk Network in New York in 2018 and was responsible for advising several large United States multinational companies for about 1.5 years on international tax restructuring projects involving multiple jurisdictions. Let us put our hands together and invite Ms. Linda Kwang and Mr. Chua Ming Hui on the stage. Ms. Linda and Mr. Chua, please.
Thank you, MC.
Thank you, MC, and good morning, everyone. First of all, I would like to thank you, the organization, to invite us for this morning session. Okay, so this morning, Meng Hui and I will be presenting to you what are the key budget proposals in the recent retable budget 2023.
Okay.
Yep. So, okay, let's start off with the very brief overall of the economic budget overview arising from this retable budget. So last month in 24th of February, our Prime Minister and Minister of Finance retabled the 2023 budget. So in his Belajawan Madadi speech, right, he firstly outlined what are the challenges facing by the Malaysian. So those challenges including the high debt burden, reduction in the governance, reduction in the foreign direct investment into Malaysia if we compare with the pre-COVID period, and also the global economic uncertainty that are affecting everyone. So these are the challenges facing by Malaysia. So when the government formulate the budget 2023, these are the things that have been in their mind, and this the budget has been prepared and formulated based on the three key principles. So the three key principles including the inclusive and sustainable economic growth, restoring confidence in institution and governance, and the third one would be combating the inequality through social justice. So these are the three key principles, and there are 12 strategic initiatives being designed in order to support and drive the three key principles. And these 12 strategy initiative, all of these with the tax measure, income tax measure, indirect tax measure, in order to support the three key principles here. If you look at the right-hand side here, these are the very overall or big picture in terms of where the government revenue would be for the 2023 and our government spending. So if you look at the top chart here, in 2023, our main income would be from indirect tax and direct tax. Both tax revenue would be more than 50% of the overall government revenue in 2023. And then in terms of the government spending, we have budgeted 386.14 billion for 2023. And this is the second largest budget so far. And in terms of the development expenditure and operating expenditure, the ratio are 25% and 75% respectively. So in terms of the overall government revenue for 2023, we are expecting to receive 292 billion. And our expenditure is estimated to be 386 billion. So it is another year of the deficit budget again. And the deficit amount is estimated to be 94 billion. So this is the overall, the economic overview in terms of the income and expenditure. The next one, we will very briefly talk about the tax revenue, since this is the biggest revenue for the government, as usual. So we are looking at 3 years, 2021 up to 2023. The revenue to be received by the government from tax is always outward trend basis. So in 2023, we are government expecting to receive 218 billion. Okay? And in terms of the direct tax and indirect tax is 164 billion and 54 billion respectively. In order for the government to so-called achieve or meet this tax revenue budget for 2023, on top of the whatever the existing tax measure or tax rule that they have, there are some tax proposal that has been proposed in the retable budget. So the key one would be reintroduction of the voluntary disclosure program. So I think in the past, pre-COVID 2019, we have the direct tax SVDP 1.0. And last year, 2022, we have the indirect tax SVDP. So this time, they introduced the SVDP 2.0. And this SVDP will be covering both direct tax and indirect tax. The implementation period will be started 1st June 2023 this year for 1 year period, which is up to 31st May 2024. And in the budget speech, right, our Prime Minister also mentioned about the intention of the government to introduce the capital gain tax in Malaysia. But this implementation will likely happen next year, 2024, and not 2023. So in the budget speech, right, he mentioned that a detailed study will be carried out, engagement with the government agency, engagement with the professional body and businesses will be carried out to understand what is the best way to implement the capital gain tax in Malaysia. The third one would be the introduction of global minimum tax. This global minimum tax, right, will be only applicable to the large multinational corporation. It will not be affecting the company where the group of company, their operation are all based in Malaysia. So only MNC are affected. Okay, and we will talk about the principle about implementation of this global minimum tax. The fourth one is the reduction of the income tax rate by 2% for the so-called M40 taxpayer group. Okay, so if you look at the 2% tax reduction, it will definitely reduce the government tax revenue instead of increasing the revenue. So the question is how this so-called the tax measure will actually help government to achieve the 218 billion. So this proposal 2% tax deduction for individual tax, right, is estimated to reduce the tax revenue about 900 million. Okay, so for the reduction in terms of the tax collection for individual, okay, it will be then increase the disposal income for the M40 taxpayer group. With the higher tax disposable income, it's expected that eventually the money will go back to the local economy, and then it will then generate the corporate income tax revenue for the government. The last one would be the increase of the 0.5% to 2% for the higher income group taxpayer. So these are some of the key tax measures that we will cover the details in our subsequent section.
So, as I think Linda mentioned, right, our revenue for 2023 is expected to be 292 billion. I think a few interesting facts here, as we can see. I think some of the stats are not basically here. Like, for example, if let's say we talk about the 2-year void period of COVID-19, 2020 and 2021, our government revenue has actually plunged quite significantly. But one interesting stat is that in 2019, which is pre-pandemic level, our government revenue that we actually received was actually 264 billion ringgit. So in fact, if let's say we look at the stats here, right, even in 2022 itself, the projected number for 2022, it is already going beyond the pre-pandemic level. It shows that at least our economy has now improved and has gone beyond what was our pre-pandemic position. And at the same time as well, in 2022, there was a lot of other measures that was being implemented by the previous government. And also, if you remember, there is this one-off 33% corporate tax for businesses that actually earn more than 100 million. That is what we call the cukai makmur. That's like a one-off tax. I think a lot of these things contributed to the numbers in 2022. Then in the initial budget that was tabled by the then finance minister in October last year, our projected revenue was supposed to be around 270 billion, which is actually significantly lower than the 2022, but it was higher than 2019. So when when Anwar took over as a Prime Minister and so Finance Minister, there was a lot of engagement session, there was a lot of initiative that was put forward above and beyond what was initially announced in last year's budget. And as Linda mentioned, right, some of the measures includes, like, for example, reducing the tax rate so that increases the money flow back to the economy. So a lot of this generates what we call spillover effect. And that's the reason why when we look at the current forecast for 2023 under the retabled budget, the number is actually something like 7 or 8% significantly higher compared to what was initially tabled. So at least, so this one also contributed to, I would say, a larger spending power by the government for the development of the nation. Okay, so maybe that's enough with stats. Perhaps we go to a little bit more of the tax matter. So it's a bit more technical. If let's say like we are going too fast, or if let's say you need to pause us for some questions, let us know. We have initially arranged for the Q&A at the back, but we will just see how the flow will come along. Okay.
Okay, let's start with the budget proposal. The first one will be the tax proposal for the micro and SME status companies. So in this year budget, right, the good news for MSME is there is a reduction of 2% for the income tax rate. So currently, based on the income tax law, if the company is determined to be SME status company, the first 600,000 chargeable income is subject to 17% tax rate. Anything exceeding the 600,000, the income will then be subject to 24% income tax rate. So in Malaysia, how to determine the SME status, I believe all of us will know is SME Corp got have a set of definition, and for income tax, we have another set of the definition on how to determine a company is SME status company. So very brief one, for income tax purposes, SME would be a company incorporate in Malaysia, and the payout capital cannot be more than 2.5 million and below at the beginning of the year. For example, if your financial year end is 31st December, as at 1st January of that year, your share capital cannot be more than 2.5 million. And the second condition is, if let's say you are the SME and you are within a group or company, meaning you have the holding company and you have the subsidiary company within the group, then the condition is, if any one of the company within the group is more than 2.5 million share capital, it will result the whole group is not the SME company. So it's very important for the group or company, or the company within the group which has more than 50% control, you must have the payout capital less than 2.5 million. And then 2 years ago, there is another additional condition imposed by government is, if you have met the share capital requirement, 2.5 million and below, and your income cannot be more than 50 million for that year. In the event you exceed the 50 million, then for that year, you are no longer a SME status company, and whatever the income, the whole income subject to 24% income tax rate. So these are the existing rules. What has been proposed is, effective from 2023, for the first 150,000 chargeable income, the income tax rate reduced from 17 to 15%. So there is a 2% reduction. So if we calculate in tax saving, right, it's about 3,000 tax saving for the first 150,000. So then subsequently, 150,001 up to 600,000, you continue subject to 17%. Anything amount exceeding 600,000, you subject to 24% income tax rate. This is effective from 2023 onwards. And in the finance bill that was released subsequently, which this additional condition was not mentioned in the budget speech, but it appeared in the finance bill. So in the finance bill, there is another additional condition imposed for the SME status. Effective from 2024, the condition imposed is the company cannot be owned or the share capital of the 20% cannot be owned by the shareholder who is not the Malaysia citizen or a company set up outside Malaysia. Meaning, if you have a corporate shareholder or individual shareholder and they are not the Malaysia citizen and not the Malaysia resident company, from 2024 onwards, you are no longer SME status company. And this 20% will be including both directly or indirectly control. Okay? I'm going to use one example to illustrate the changes. If you look at the left-hand side, the current rules, assuming for GHI Sendang Berhad, payout capital is 2.2 million. Okay, and the whole group share capital is less than 2.5. 79% is owned by Sendang Berhad in Malaysia. Another 21% is owned by a Singapore corporate shareholder. So under the existing SME rules, GHI Sendang Berhad is a SME status company for tax, and they are eligible for the 17% tax rate for the first 600,000. However, from 2024 onwards, the fact that this GHI Sendang Berhad is owned by more than 20% by a Singapore corporate shareholder, okay? Because it exceeds the threshold of 20%, it will result GHI Sendang Berhad become a non-SME status company, and then you cannot enjoy the 15 and 70%. The whole chargeable income will be subject to 24% tax rate. And I want to give another example, which is not here. Is just now I mentioned the 20% would include both directly or indirectly control. Assuming that in this proposed, in this structure, DEF is another Sendang Berhad, assuming. So if you look at DHI Sendang Berhad, is 100% owned by Sendang Berhad, 79% and 21% by Sendang Berhad. Corporate shareholder are Malaysia entity. But what if the shareholder of ABC and DEF Sendang Berhad is owned by another foreigner, for example, Singapore entity? So the ultimate shareholder become foreigner. So the fact that the wording for the 20% is directly or indirectly owned by a foreigner, so from 2024 onwards, DHI Sendang Berhad with that structure will also not qualify for the SME status. Okay?
And I think the question is, right, what it really means to all of us, right? So the disqualification that we are talking about here is essentially the difference between the 15 or 17% tax rate versus 24% tax rate. To put it simply, we are looking at 45,000 of tax savings. 45,000 may be small, but just imagine a lot of our companies, SMEs, we have like 10, 20, 30 companies within the group. If let's say like we have like one investor that is a foreign investor more than 20%, directly or indirectly, automatically the whole group will fail. So if you have 10 companies, that translates to 450,000 of additional taxes. So it can be multiplied further if, let's say, your group is very large. I think this is one area to watch out for. The good thing is there's a bit of time. There's a bit of time to plan because this rule, the new rule, will only come in 2024 for the foreign shareholder. 2023, which is now, is actually just the reduction of tax rate. So there's a bit of time for you to plan ahead and see how will it really impact the groups that we basically have. Okay, moving on from SME, right? So as I think what Linda alluded just now, Malaysia actually intends to implement corporate tax capital gains tax on disposal of privately owned shares. Actually, capital gains tax is not something that is alien, but at the same time, it's also alien to our taxation system as well. Our income tax has been always built up for the past 60, 70 years on the pretext that we only tax income and not capital gains. But we also have a very limited capital gains tax regime, which is basically a real property gains tax, where we tax disposal of real property and also real property company. Okay, so what has been mentioned just now is that, okay, the government is currently trying to study the implementation of a capital gains tax on the disposal of privately owned shares. One good news, I do not know whether good or at least some relief, it was mentioned that, oh, this one is only applicable if the disposal is company. Okay, so hopefully this qualification still remains when the rule is being implemented subsequently. And currently the government is trying to undertake this particular study. It has the guidelines, the consultation has not started. It will be starting soon. And one interesting point to note is that it's mentioned here a lower tax rate, right? So in the initial speech by Prime Minister, when he announced this particular thing, it was mentioned as a lower tax rate of a CGT. But later on, when the official speech was released, the word lower rate was basically removed. We are not too sure why. Maybe perhaps they were just trying to remove this particular word just to manage expectation. But again, we really hope that at least government will really consider this very proper. One more thing is that capital gains tax, like, especially when we talk about our region, our ASEAN region, our closest neighboring countries, majority of them actually do have capital gains tax on shares as well. And Indonesia actually being one of the highest one, 22% on resident, and non-resident is actually 5% of the revenue, of the gross proceed. Whether you are making gains or you are making losses, you're still being taxed at 5% for non-residents. So it is not really, I would say, something that is odd, but at the same time as well, capital gains tax has always been embedded in their taxation regime when it first started. One really not ASEAN country per se is basically Hong Kong, but globally we will always compare 3 territorial scope countries, Malaysia, Hong Kong and Singapore, because our taxation is always very similar. We only tax income and not capital gains, except for RPGT. We also only tax on Malaysian source income and not on foreign income. But then that one is now a history already because of our recent changes in history. But at the same time also, we have not heard any recent development in Hong Kong or in Singapore. Singapore, there are now discussion. There are now discussion to actually also tax capital gains, but it's actually only on certain type of capital gains. I think it's something like disposal of foreign-owned shares or something like that. And a lot of this also is being pressured by OECD as well. Okay, so what it really means to us, right, with the introduction of capital gains tax, at this point of time, if you ask me, I think there's a bit of issues that really need to be clarified. We hope that during the engagement sessions with the professional bodies, all these things will be addressed. One good point that was basically mentioned to us is that, okay, during the, if let's say this were to be introduced, the capital gains tax would not be then applicable if, let's say, the sale is through an IPO. It could be a very long gestation period because it takes around maybe 6 months to at least 2 years for you to plan the IPO journey. So it was mentioned that if you were to dispose of as a result of an IPO exercise, it should not be captured under this capital gains tax. At the same time also, there's a lot of things to be watched out for. Like, for example, is this going to be a new separate law? Or is it going to be embedded in our Income Tax Act? If it's going to be embedded in our Income Tax Act, then the question is, how will the law be changed? Because, I mean, for those who are familiar, right, our Income Tax Act charging section is always Section 3, okay, income accruing in or derived in Malaysia. And we always talk about the word income. And the income here really refers to a revenue type of income rather than a capital gain. And if, let's say, a new law is being introduced, right, then there's a larger issue. What about if, let's say, for example, it involves foreign trades, like our tax treaty? Our tax treaty right now only covers income tax. I mean, income tax and petroleum income tax, But so if, let's say, like there are new laws, then a lot of these things must be changed along. Otherwise, there's actually no protection of foreign tax credits and things like that. So this is definitely one space to watch out for. At least we know that it doesn't affect individual, and hopefully this one still stays true, and it only affects companies disposing of privately owned companies. Okay. Moving on. To the next proposal is the definition of the word plan. So this is actually for capital allowance purposes. For those who are not entirely sure, the plan here is not the green plan that we are talking about here. This is actually in a text term where we basically say that the plan here is actually refers to something like an asset or a machine that is basically used in our business, that we actually claim capital allowances. Capital allowances for accountants, I think, is very similar to tax depreciation. So depreciation for tax purposes, we always say add back, because that's not tax deductible. But at the same time, for certain type of assets, we will then basically claim a capital allowance. So in the past, right, for the past 60, 70 years, there's been no definition of plan. We always refer back to English case laws, the 1800s and the 1900s, and even to the point to say that, okay, for example, horse is actually a shuttle and is also then qualifying as a capital allowance because of there is a specific function of that particular horse for the particular cart. So because of a lot of recent case laws, and I think one of the most prominent one is this case called Tropiland, where the government, the Inland Revenue lost a case. The taxpayer managed to argue that a car park is basically a plant because there is a specific purpose to use that. So because of all this recent development of cases and what is really a plant, what is really not a plant, in 2021, it was proposed and it was basically enacted. There was a definition of the word plant being introduced in the legislation, and it specifically excludes three things: buildings, intangibles, and any assets used that function as a place within the business in which carry on. Is something like an office or office space or basically a structure. So this disqualification basically disqualifies a lot of things. But at the same time, the building here, right, I think for manufacturers, we have this special allowance called Industrial Building Allowance, IBA. That one still remains the same. That one is not changed. The difference between Capital Allowance, CA, and IBA, Industrial Building Allowance, the difference is that CA we claim between 2 to 8 years of tax depreciation. IBA is between 10 to 30 years. It's a much longer depreciation. So that one for manufacturers, it doesn't change for the word building. But basically, when they put in this building, right, so a lot of things are basically disqualified as well. And intangible, right, I think there's been a lot of debate with Inland Revenue, really intangibles, okay, there's a lot of echo, intangible, whether it really qualifies for capital allowance. And there is actually a very famous case, I'm not too sure whether you heard of, CIMB, when CIMB actually merged with, I think back then was a Bank Bumiputra and Commerce. So as part of the acquisition, right, there was a purchase or acquisition of, what do you call that, this customer list. So intangible comes in two forms, okay, IP. One is registrable, which is patent, copyrights, trademarks, and those are non-registrable, like customer list, customer data. So when CIMB, when they had the acquisition, right, CIMB basically claimed capital allowance on the customer data because based on the requirement of the law, what is a plant, and based on all the case laws, that particular customer data then fits that particular definition. There is a specific purpose for it. So then, Inland Revenue, when they came and checked the book and came and audit, oh, you basically claim capital allowance on this intangible, which is not really a physical asset per se. Okay, I'm going to disallow it. So that case was brought to court after many years of argument. It was basically settled that, okay, plant can also include intangible as well, and because based on the requirement of the rules, okay, the customer data that CIMB acquired qualifies for definition of plant, they can basically claim capital allowance. So all this also translates to the development in 2021. because of this, right, there's a lot of lobbying from the professional bodies, from the industries, even from us Big Four as well. And because if we were to do this, right, we are basically discouraging a lot of companies either to develop IP or to acquire IP or even for expansion as well. I mean, there's a lot of barrier to this. So finally, I think at least it's being heard. I think we are also trying to identify any specific reasons as well because they introduced one specific paragraph there, right? So in 2020, it was 2023, currently we still use the word propose. The reason is because the finance bill has not been gazetted. We are not too sure when is it going to be gazetted. It's supposed to be anytime soon. It has now been officially released. Government has agreed to remove intangible asset from the particular list of disqualification. But with the inclusion, I think this one remains an unknown factor.
Yeah, just to add on to what Meng Hui mentioned, if you look at the yellow fonts here, with this proposal, the government add in the law is any asset as prescribed by the Minister of Finance. So this is a very powerful wording, and it gives the power to the Inland Revenue to just list out whatever the asset item to them they want to treat as non-qualified for capital allowance. So just now, Meng Hui mentioned about the two-case law, where taxpayer managed to argue in the court that car park building is qualified for CA, customer database or customer listing qualify for capital allowance. So with this powerful wording in the law itself, if when the government gazette the order and list down this car park building is non-qualified, customer database is not qualified, okay, everything will be non-qualified. So what is very important is this will be effective 2023 this year. So it's very important that we need to watch out exactly what will be comes up from this list. Because if whatever the asset item that you have been claiming as plant in the past, with the release of the listing, you will no longer enjoy the you are no longer entitled for the capital allowance. So at that time, depending on the wording of the list, we have to determine whether the so-called listing is only applicable for the new asset purchase from 2023 onwards, meaning whatever that you have been claimed in the past, it will not affect you. But if the wording has been worded in such a way that effective from 2023, it also applicable for your old asset that you have been claiming as plant, meaning that for 2023, your tax return, you cannot include or you cannot claim the capital allowance anymore. So watch out for this so-called the prescribed list to be released by the government and take into account for your 2023 tax return and tax estimated purposes. Okay, then I will cover this, the expansion of the double deduction. So this is double deduction for the employment costs that incurred by the employer in Malaysia for the employment of the senior citizen as COVID extra employees. And the government has issued the Gazette order. In order for the employer to claim the double deduction, there are terms and conditions being mentioned or imposed. For example, the employee must be the full-time employees. His salary cannot be more than 4,000 a month. And the employer and employee are not related parties. And that is, and the employer and employee cannot be the same person. Okay, meaning it doesn't apply to the sole proprietor lah. Okay, so this is effective from 2019 to 2025. So what has been announced in this year budget is they extend the double deduction for the recruitment of the attendees and former attendees for the Henry Gurney School and the Protection and Rehabilitation Institute and Non-Government Care Center registered under the Social Welfare Department. So this double deduction will be effective this year onwards up to 2025. So whether there will be additional condition to be imposed by the government for the double deduction claim purpose, then we have to wait for the Gazette order to be issued. The next one would be a special tax deduction, meaning one time that you can claim the tax deduction for the expenditure incurred by the company on the Malaysian-made handicraft. This special tax deduction is only applicable for the hotel business company, meaning you are in the business of hotel operation. If you are not a hotel operation, this is not applicable. So what has been proposed is, for the hotel business operator, if you incur the expenses for the purchase of Malaysian-made handicraft, and you purchase the handicraft from the local handicraft entrepreneurs registered with the Malaysian Handicraft Development Corporation. If let's say you purchase the handicraft, you can claim up to 150,000 one-off tax deduction in your tax return. And you must make the application to the MOF for the expenditure that you incur from 1st Jan 2023 to 31st December 2025. So this is the single tax deduction. So when this proposal is announced, right, when we analyze this proposal, how as a tax professional, how we look at this professional is, first thing, for a hotel, whether other than the special deduction, what are the deductions that you can claim? Just now, Meng Hui talked about the plants where you are allowed to claim capital allowance because that asset item is used for you to carry out your business. And then for a hotel, arising from some case law development, where the taxpayer actually won in the case law, where when they incur the expenditure for decoration item of for the art item, and those items can actually create the atmosphere for the enjoyment of your hotel guests. Okay? And so for that cases, the judges are ruled in favor of the taxpayer. These are the decoration item, art item. As a hotel, is your plant and you can claim the capital allowance. So these are the principles set up under the case law. So what does that tell us is, if let's say you are a hotel, you incur more than 150,000, or you incur outside this qualified expenditure, or you are not purchasing from someone who are registered from Malaysia Handicraft Development Corporation, okay, it doesn't mean that whatever the expenditure you incur, you cannot claim anything. You still can consider to determine whether the item that you purchase, can it create the atmosphere or not for your hotel operation. If yes, you can go and claim the capital allowance. You need not necessarily have to claim this so-called one-off special tax deduction. Okay?
So moving on to incentives, right? As you can see, I think right now we have actually tabled down 6 incentives that was basically extended in the current budget. In incentive, or even in some of the deduction, like for example, just now there's a special deduction for some of the hiring of ex-convict, ex-inmates, right? There's always a finite timeline to it. The reason is because I think, first of all, incentive is to encourage people to do something. You're not too sure whether you want to do or not. The incentive is there then to motivate you to say that if you do it within this particular period, then you will be given. So hence, that's where the incentive always will have a finite timeline and is meant to then spur the economic activity in that particular industry. But sometimes, like, the take-up may not be very good. Like, for example, I think in this case, if you can see here, a lot of the extension ranges between 2 to 3 years to 5 years, like shipyard. Shipyard is being extended for 5 years. And because I think the industry, there's not many takers, and that is really something that I think the government really want to promote. So out of this entire, I'm not going to run through each and every of the extension. I just want to run through maybe 2 particular ones that may be of interest. I think the first one is this ACA, Accelerated Capital Allowance for Automated Equipment. So accelerated capital allowance in our tax term is basically meant to say that, if you were to incur certain type of expenditure, instead of claiming the asset over 8 years, you claim it over 1 year or 2 years, depending on the particular rate. Okay, that's why we call accelerated capital allowance. In the past, depending on what industry you are in, the limit is actually very low, 2 or 4 million. Okay, and at the same time also, there's also an incentive that MIDA offer, an ITA incentive as well. So it's kind of like two, they give you an accelerated capital allowance, they also give you an investment tax allowance as well for each and every dollar that you incur. But because the limit is so low, right, the take-up rate is very low as well. And I mean, whenever you talk about automated equipment, automation of equipment, a lot of the expenditure, it can easily breach this amount depending on the size you are talking about. So one of the moves that is quite welcome, but not high enough as well, is that there is at least an increase of the limit to 10 million. So that is something that is really to watch out for, and really if you are in this space and you are really thinking of automation, this is something that you can really consider. Okay, and another one is about relocation of manufacturing companies to Malaysia. So 2 years ago or 3 years ago, we may have heard of this incentive called the Penjana incentive. It was introduced as part and parcel of the stimulus package during the MCO period, during the COVID-19 period, and also as part of the US-China trade war, trying to encourage or attract companies who are leaving China to come to Malaysia. I mean, unfortunately, the program is not as successful. We didn't really attract that many manufacturers as opposed to our neighboring countries. So this Penjana incentive, right, actually is one of our best incentives in Malaysia. It offers a 100% income tax exemption for 15 years. Because a lot of our incentive is either 5 or 10 years, 100% exemption. So then at that particular point of time when it was released in 2020, it was actually meant for all industries, all manufacturing companies that relocate to Malaysia. So that particular incentive expired on 31st of December 2022. Government did a study and they felt that, okay, I think there's a need for Malaysia to focus and refocus, and hence this particular incentive was extended, but only extended to companies in the E&E industry, electronic and electrical industry. Okay, so if let's say, for example, you are aware of investors who are really looking at this, right, or maybe E&E manufacturing companies who want to relocate to a certain area, this is one of the incentives that you can actually speak to them or at least inform them. And right now we have extended the incentive until December 2024 next year. We are not too sure again whether the government will extend further or not. Given later on I will run through the qualified global minimum tax rules, all these global rules to be implemented by OECD. We are not too sure whether this incentive will be extended by then as well. So it is something that I think is good to at least take up and encourage the investors to basically proceed further with their investment option. Okay, this is basically on tax incentives. We'll move on to ESG, environmental sustainability, and also governance as well. So ESG, I think, is a very, very, very hot topic, and as part of the a government initiative to basically embrace more greener initiative, right? They basically introduced 4 particular incentives: tax incentive on carbon capture and storage, tax incentive for renting of EV vehicles, but unfortunately there's also a finite life. Then after that, a manufacturer of EV charging equipment, and also a AI-driven reverse vending machine. When I first read this particular announcement, right, I was actually thinking, what is a reverse vending machine? So for those who are not aware, so vending machine, right, it's like how you would go to a vending machine to basically dispense off, let's say, drinks. You put in money, then it will dispense out a can of drinks or a bottle of water. Reverse vending machine works the other way around. You put in a can or an empty can or a bottle for recycling, and it will dispense out cash for you. So that's what essentially a reverse vending machine is. And it's really then to encourage people to recycle, because, right now the bottle or the can is basically worth more than just you scrap it or maybe just sell to a second-hand, the scrap collector. So if, let's say, companies who are donating or sponsoring this particular AI-driven reverse vending machine, within a certain period of time, you can basically get a tax deduction. Okay? That is on the reverse vending machine. The other one is on EV vehicles. I think EV vehicles, maybe in this part of Malaysia, especially in Sabah, may not be so popular yet. But hopefully, with the development of infrastructure, more charging stations are coming up. EV is being something that really we want to pick it up. So for those, if let's say like for example, I think you may be aware of companies who buy cars which is value is above 150,000 ringgit, there is a limitation of the capital allowance that we can claim. It is only limited to 50K. Partly it's because it's also to promote our Malaysian-made cars, which is worth less than 150,000 ringgit. At the same time, if you were to rent a car that is worth more than 150,000 ringgit, your tax deduction is also limited to 50K as well. Okay, so specifically for this EV vehicle, right, because most of the EV vehicle is actually worth more than 150K, so to really encourage businesses to then use more of EV vehicles, this particular limit is now increased to 150 only for the next 3 years, 23 until 25. Okay, so if let's say your companies are thinking of venturing or maybe like thinking of renting EV vehicles, this is again another item that we just need to watch out for. Okay. Okay, so moving on. Okay, so okay, this is this topic. If let's say like we were to talk about it, it can take maybe a whole week and we will still never finish about it. But maybe to just briefly mention or describe this in maybe 5 or 10 minutes time, right? BEPS, right? Base erosion profit shifting. I mean, you all may have heard of this Pillar 1, Pillar 2 initiative, BEPS 1.0, BEPS 2.0. So BEPS 1.0 was initially announced with 15 or 17 action points to basically try to see how we can curb abuse of tax rates, or maybe trying to shift profits here and there, okay? Then after that, a lot of the measures were successful, but some of it were not implemented due to a lot of issues as well, okay? And then after that, OECD came out with what we call BEPS 2.0, Base Erosion Profit Shifting version 2.0. And in version 2.0, basically two things were being announced, a Pillar 1 and a Pillar 2. Pillar 1 is to talk about more of like allocation of taxation based on where your customer or your market is. A lot of it is to counter digital type of transaction. Like for example, you can be based in Malaysia, but most of your customers are, let's just say, in Indonesia or Singapore. But in Indonesia and Singapore, you don't basically pay taxes. You only pay taxes in Malaysia, right? So in kind of like more of an equity. So then I think this particular Pillar 1 initiative also mentioned something along the lines that then this particular, I mean, if let's say you operate only in Malaysia, then you also have to pay taxes in the countries where your customers are based. But it's very, very, very difficult to implement this particular initiative. And as part of this, there's supposed to be this digital service tax or the digital tax and things like that. So it's very difficult to implement, right? So then now the concentration of OECD on what we call a Pillar 2, a global minimum tax. And what essentially a global minimum tax means is that, let me see whether there should be a more detailed wording here. So global minimum tax has now been set at 15%. So if, let's say, for example, like what Linda mentioned just now, it affects a lot of multinational companies. If your organization, your whole group's revenue is more than 3 billion ringgit, then you will definitely be affected by this particular rule. So, I mean, a simple thing, if right now you are already filing a report, what we call a country-by-country report, CBCR, then you will definitely be affected by this. If you are not, just need to make sure your threshold, are you thereabout? If you are thereabout, this is also another rule to be concerned as well. Okay? So basically what it means is that if, let's say, for example, I can be a Malaysian HQ company, I have operations around the world. If, let's say, your foreign operation does not pay a minimum 15% tax in that particular jurisdiction, let's just say, for example, Ireland. Ireland is 10%, right? So the tax is definitely below 15%. So then there is a need to increase the tax by 5%. And the question is, where do we pay? Do we pay in Ireland? Do we pay in the holding company? Do we pay in Malaysia? I think this is where now the argument is about. If, let's say, you operate in a country, you don't achieve a minimum amount, then there is a top-up tax. Okay, so what it really means is that, okay, so there's a few terms that we just need to be aware of. Like, okay, so a very common thing, like right now, if you have read a lot of article, there's this term called QDMTT, Qualified Domestic Minimum Top-Up Tax. Okay, Malaysia has committed to say that we will implement a QDMTT by 2024. Okay, and then after that, so basically QDMTT affects a particular country. If, let's say, that particular MNC operates in Malaysia, and a lot of it affects companies with incentive, right? Because incentive, most of the time, your taxes is either 0 or maybe 7.2%, depending on the type of exemption. So if, let's say, they are given that they don't pay up to 15%, that particular MNC then supposed to pay an additional top-up tax based on their profits in Malaysia, adjusted profit, to 15%. So this will be implemented in 2024, and it will definitely, in fact, affect investors with incentives. But at the same time as well, it takes into account the average of taxes within the country. So if, let's say, they have one trading company, one manufacturing company, one sales company, so the manufacturing company may have incentive, but the trading and sales doesn't have incentive. So we will look in totality, the operation in the country. So Malaysia will implement this in 2024. And then in 2025, we will implement another rule called the Income Inclusion Rule, which is the global rule. So if, let's say, for example, like the first example I mentioned just now, right, if you operate in Ireland, if, let's say, Ireland, you pay lower taxes, and let's just say Ireland do not implement this top-up tax in Ireland, then Malaysia will then collect the additional 5%. Okay, so then you basically have to pay the top-up tax. So essentially what it means is that all these top-up tax is all about an added cost of doing business. It will definitely impact the group's bottom line. Okay, so Malaysia, a lot of our ASEAN countries, like even Singapore, okay, we're going to implement this in 24 and 25. The first country that I'm aware of that is going to implement both of these rules, the domestic rule and also the global rule, is basically Korea, surprisingly. Not even the European countries. So Korea will implement these two rules in 2024. What it really also means is that if, let's say, for example, we have Korea, right, maybe a South Korean company, they have an entity in Malaysia. If, let's say, Malaysia do not implement this particular top-up tax rule, right, then Korea will just be benefited, because then there will be a top-up tax that the group need to pay in Korea. So Korea is the first country that will then implement this, both IIR and also QDMTT. A very simple illustration is what we can see here, right? Okay, like for example, in the diagram on the left, I think there is two companies that we are talking about profit level. We are talking about always the effective tax rate, right? ETR. So if the effective tax rate for the first company is 24%, the effective tax rate of the second company is 10%. So when we do the averaging of the profit and the taxes that they pay within this particular country that they operate in, the effective tax rate is 17%. So 17% is above minimum requirement. Okay, good, don't need to pay any top-up tax. I think we are safe at least for this particular country. What about the second country? Then the second country, the first entity, let's just say Malaysia in this case, right? Malaysia is 7.2%. You basically get a 70% tax exemption. Okay, 70% tax exemption, you pay tax at 30%, so your effective tax rate is 7.2%. And then the second entity, because of Labuan, you basically pay 3% because of Labuan Al-Batar tax. Your effective tax rate is basically 5% or 5.1 to be exact. So what it means is that then this particular group will have to pay additional 10% tax in Malaysia with the implementation of this particular rule. There are a lot of issues right now. The question is who is supposed to pay the tax? Is it subsidiary A? Is it a Malaysian company, or is it a Labuan company? Who to pay, and then how to pay, and things like that. I think a lot of the administrative matter needs to be ironed out, but it all translates again down to the bottom line. There will be increase of cost, there will be increase of cost of doing business. This is really one space to watch out for if you are already affected by the global rules, okay, or your group revenue is more than 3 billion ringgit. We are not too sure whether the threshold will change. What I understand is that the reason why I said 3 billion is because in the past when we implemented CBCR, right, country by country reporting, the Malaysian threshold was 3 billion. But the global threshold is 750 million euro. So 750 million euro at that particular point of time, 2, 3 years or 4 years ago when it was implemented, that was the exchange rate. Right now, the exchange rate has already changed. So what I understood is that the government intends to use the euro equivalent as the benchmark, but we are just not too sure because until now, the rules have not been released yet. So for early year-end companies, this is definitely one of the things that you need to be concerned of. Okay, moving on to a little bit of an interesting thing of what we call an e-invoicing, right? Okay, so this was really not specifically announced, but it's kind of like announced and also preluded as well. There is a pre-budget statement last year, sometime in July, where the Finance Ministry, as part of one of the pre-budget statement that was mentioned in July 2022, it mentioned that, okay, Malaysia will implement e-invoicing. Then after that, it was silence. Then in October or November last year, there was also an announcement by MDEC and also Inland Revenue Board talking about both MDEC and Inland Revenue Board will collaborate together to implement e-invoicing. Okay, but there were no timeline that mentioned specifically. There were no indication of how is it going to be done. So in this year's budget, it was a bit silent. However, in one of the Inland Revenue Board's seminar, when they were conducting, right, they basically flashed up this particular deck whereby they mandated implementation of e-invoicing in a few stages. Start off with companies with revenue above 100 million. This is top line revenue, not even profit. So top line revenue, which actually will affect a lot of organizations, especially if you are in a business where your trades are super high, like property developers. I think palm oil industries will definitely be affected as well. So mandatory for companies with 100 million by June 2024, which is 1 year, 2 years, 3 months, and the rules are not out yet. And then compulsory adoption by January 2027 for all businesses, okay, including all the small and medium enterprises and also sole proprietor as well. You may be asking, right, what is really e-invoicing? And maybe your organization is really doing e-invoicing. E-invoicing is not the common type where currently we are doing, whereby, okay, we print out a particular invoice, or we just PDF a particular invoice, or we just scan the invoice in a picture or PDF, then we just send out to our customer. That's not e-invoicing. E-invoicing here actually has a lot of focus on the word E and electronic. And it involves an automatic communication from a supplier's accounting system to your customer's accounting system. So let's just say, for example, EY, right? Ernst & Young, we are your tax agent. So when you file your tax return, when we issue an invoice, traditionally we will either send it by mail or we will email. Under e-invoicing system, once I click, okay, finalize the invoice in my system, the invoice will be automatically sent to you, your customer, and you will pick up the invoice to say, okay, now you have received an invoice from EY. Question is whether do you want to approve or you want to reject the invoice. Maybe sometimes there's some errors, or maybe there are certain things that you don't agree on. So that is e-invoicing. It involves an automatic communication, and it really then eliminates the need for data entry. But what it also means is that while this communication is happening, right, there's another line of communication to the Inland Revenue Board. And basically, IRB will get hold of the invoice. And this is just one transaction. Imagine the entire nation. Okay? So in some of our discussion with Inland Revenue Board, right, they are thinking and they are expecting to process a minimum of 2,000 invoices per second for the entire Malaysia. That is the number of a volume of invoice that we will receive for the entire Malaysia. And what it basically means, everything will be above board. And the Inland Revenue Board can basically build up your balance sheet and income statement. Nothing is hidden. Okay? And it also affects both corporates or businesses and individuals. And also what we understand is that customs will be part of this program for the implementation of a services tax or sales tax, or maybe GST if, let's say, it were to really come. So a lot of things will be digitalized. There's a need for upskilling. There's a need for us to relook into our system capability, into our accounting system. And question is whether can we really cope with this particular thing. So a lot of this will drive change, right? It will drive change in the way on, first of all, like for example, is there a need for then tax compliance? Is there a need for us to file tax return? Because it's all automatic already, right? Is there a need for tax audit? Maybe tax audit will change. It's no longer a situation where right now, Inland Revenue send a letter, can you please provide me with your information within 30 days or 14 days and things like that. And then we have to go and give CD or we go and give thumb drive. It's no longer that way. It could be a situation where, okay, I see that there is this particular invoice, maybe it's not tax deductible, but maybe in your tax return, why do you say it's tax deductible? It could be that situation. Or it could say that, hey, why is this invoice there, but then it's not even in your audited accounts or in your tax return. It could be a different type of audit. It could be a different type of analytic as well. Okay, so it will affect businesses to that angle. That's one. Individual. So I had a privilege to talk to some of our partners overseas, right? Because e-invoicing is not something that is alien in the world. Okay, e-invoicing has been implemented successfully in a lot of countries, and as you may not have guessed it, right, e-invoicing actually started in Latin America. Okay, they have started in e-invoicing for the past 20 years, 25 years. I think Mexico since 2002 or 2003, Brazil was like somewhere there about as well. But a lot of it is basically to combat what we call the shadow economy, all the illegal activities that happen in those particular countries. But it has been there, and it has been developed all over the years. So Australia has announced implementation of e-invoicing, but it's only for a business to government transactions. France has implemented e-invoicing. It announced it last year, 2022. It will be a mandatory adoption for all businesses in 2025. Singapore actually has e-invoicing, surprisingly, but the problem is that Singapore is not mandatory. It is more of a voluntary basis, because for Singapore, they have no issue with compliance. The e-invoicing for them is more of a digitalization effort. So in a lot of part of the country, we already have, a lot of countries in the world, we already have e-invoicing. And Malaysia, I think Malaysia's aim is basically to be the first country in ASEAN to basically adopt e-invoicing. There are right now talks about Vietnam and Philippines trying to also implement e-invoicing because of Malaysia's initiative. Okay, and when the world really go borderless, right now it's quite borderless already, right? Literally under digital, when it's borderless, the communication of the invoices no longer restricted to Malaysian invoices. It will also be foreign invoices where then you automatically receive and things like that. So then when it comes to individual, right, when I was talking to one of my partner in Mexico, they're saying for individuals, it's actually a very convenient thing. Like for example, for Malaysia, right, if let's say like we were to claim, we got relief for sports equipment, that's the most easy example, right? So we're going to buy a racket, and then after that, okay, you have to go and keep the receipt. If it's a thermal receipt, you have to either scan it or you have to go and photocopy it so that it is not faded. Okay, and then after that, you have to keep it like 3-5 years, wait for the Inland Revenue to come and audit. Sometimes they don't even come and audit and things like that. So in Mexico, it's actually very simple. And because the businesses are being tagged, right, the moment you swipe your card to basically buy a racket, the next day, you will appear in your income tax return to say that, okay, you have made this purchase, and you can basically automatically claim the relief. There's no need to keep receipt because IRB got a copy of the receipt already. And a lot of the compliance process is being made very simple. Even like tuition fee, kindergarten fee, whatever relief that we need to claim, the moment you pay, it will automatically be recorded already. Okay, it is also an ease of compliance, but it also means that there's nothing can be hidden lah. Okay, and also right, especially for the rich and wealthy, I think you may have heard of this thing called a very horror thing called a capital statement. Inland Revenue love capital statement. They just need to send a capital statement to one businessman to say that, okay, please, sorry, too excited already. So I give you a capital statement, please declare all your income and all your expense, and they are basically trying to match your spending. Actually, with e-invoicing, they can basically match your income and spending already. And they will come to you, Mr. So-and-so, why are you spending more than your income? Where do you get the money from? And especially, and actually, right, with all this e-invoicing, there's actually nothing that will be hidden anymore because there'll be a lot of transparency and a lot of transaction will be going through the banking system. Okay, so hence the tracking on how the money flow, how the money goes, and things like that, it will all be, I would say, above board already. Actually, one of the story that my Mexican colleague shared is that e-invoicing actually contributed a little bit to divorce rates because a lot of being tracked, right? And then in the tax return, they can basically claim certain things. So apparently, the spouses found out things that they're not supposed to find out, lah. So just wanted to share this particular story. I'm not going to go into detail. I just find that particular story was very interesting. Yeah, but really, this is a space, and this is a space that we really need to watch out for. We are still waiting for the Inland Revenue to come up with that particular guideline, and we understand that customs are supposed to be on board. Customs has not announced their implementation timeline yet. I think there are currently engagement sessions with a lot of public sectors and also the professional bodies about this particular issue. Okay. So I know I've actually delivered quite a bit of bad news or something that make you jittery. Maybe I will hand over to Linda to declare some of the better news lah.
Yeah, actually, when Meng Hui talk about the e-invoicing, I'm not sure. I look at the faces of everyone. Whether you are start worrying about your e-invoicing system or you start worry for me and Meng Hui, whether we all still got the job from 2027 onwards. Okay, with all the digitalization. So I believe these are the very important thing that we want to let you know. It was not mentioned in the most recent retable budget, but it's important to let you know what has been thinking in the Inland Revenue Board. Okay, so these are in future or in the near future, in Malaysia, the tax landscape will change a lot. Okay, so I believe we will still got the job after 2027, but probably both of us need to work out how to really change the way that we run our business, how do we comply with the tax rule, and how do we manage the tax audit and investigation in future when everything is digitalized. Okay, shall we go for a break or we continue? We go for a break. Okay, so I pass it back to MC. Okay, thank you.
Thank you so much for the insightful presentation for session 1. Ladies and gentlemen, we will now go for a 15-minute break. The time now is 10:21. We request everybody to be back here at 10:35. Light refreshment will be served at room 603, just opposite this auditorium. Okay, so please.
The winner of the Gig Master Competition 2019 goes to G4M5.
As we move into the
Mic
digital
check, mic check.
economy,
Hello, everybody. May I
digitization
have
is
your
very much
attention,
part of
please?
our
We will be starting in about 5 minutes, so please settle down, take your seats. Again, we will start in about 5 minutes. Thank you.
life now. And digitization means new ways of doing work. So by having this initiative, we hope to inspire students that they can be their own entrepreneur by conducting their business online and learn from the best e-commerce platform, Lazada.
Pendekatan yang diadakan oleh IT College dan juga Lazada merupakan satu pendekatan yang sangat produktif yang mana masyarakat ataupun khasnya para belia yang berkunjung pada hari ini dapat didedahkan bagaimana mereka harus menceburi bidang e-dagang ini. Apakah pendekatan yang sesuai dan apakah juga produk yang sesuai mereka pasarkan secara online sama ada melalui Lazada dan juga sebagainya.
Learning more about online business not only helps us understand the boundaries and the complexities of online business. I feel like being in an online business not only benefits myself but others as well, because it's about fulfilling the needs and wants of other people. And I feel like if I were to become one of the online businessmen, I feel like I can help even more people out there.
From JobStreet's 2019 survey, it is found out that digital talents are employers' top priority. E-commerce was also reported to be one of the top 5 core work-related digital skills sought after by employers. This initiative will nurture existing digital talent and hone budding ones for Malaysian employers. Well, it is extremely important as e-commerce is the way of the future.
Ladies and gentlemen, please be seated. Thank you very much. Ladies and gentlemen, we will now proceed with the second session for today. Once again, let's put our hands together to welcome Ms. Linda and Mr. Chua on the stage.
So in the interest of time, when we run through the proposal, if you have any question, just feel free to ask the question. Okay? Okay, very quick one on the personal tax debt affecting you and me. Okay, I think the first proposal, you all have read it from the newspaper. Okay, for individual tax, there is a reduction of 2% for the chargeable income tax bracket from 35,000 to 100,000. Okay, there is a 2% reduction. And for the chargeable income tax bracket 100,000 onwards, there is an increase by 0.5% to 2%. And if you look at the right-hand side of the tax saving column, okay, so the total tax saving would be 1,300 if, let's say, you fall under this category of the taxpayer. However, for the higher income group of the taxpayer, then the maximum additional tax liability to be increased arising from this proposed 0.5 to 2% increase is 10,950. So this would be the cap maximum additional tax. The reason is they never adjust the top tax rate in Malaysia, meaning the top tax rate is still 30%. You will not be paying more after this budget proposal. Then the next one would be the medical relief. Currently, under the law, when you fill out your personal tax return, you actually can claim up to 8,000 medical relief for the expenses incurred on serious illness, and the expenditure will be the expenditure incurred by yourself, your spouse, or your children. And during the COVID, right, the government have made the proposal is for those COVID-19 test kit or the medical testing detection test, you are allowed to claim the medical tax relief up to 1,000, and that 1,000 including the full body medical checkup. And also 1,000 for the cost of the vaccination. So this has been introduced during the COVID-19 time. So what has been proposed this year is, first thing, the 8,000 now increased to 10,000, additional 2,000 that you can claim. On top of that, right, they also include the medical tax relief that you are allowed to claim on the expenditure the individual incur on their children to carry out the diagnostic assessment test on the children, and also the intervention expenditure for the autism, attention deficit hyperactivity disorder. These are the expenditure that if you incur on your children, you are allowed to claim, but they have a cap of 4,000. Meaning for the 10,000 medical relief, even you incur more than 4,000 on the expenditure, you're only allowed to claim up to 4,000. And this 4,000 is only applicable for the children below 18 years old and below. There is an age limit, and you can claim more than for more than one children. Okay, if let's say you have more than one, you actually can do, but it all kept at the 4,000. And this increase or enhancement will be effective from this year. And what is very important is when it comes to the audit, if you are claiming all those medical tax relief, you must make sure you keep all the receipts, because they are going to audit you with the supporting document. The next one is the EPF. Okay, I think we all contribute EPF. There is a mandatory EPF rate of 11% that as an employee, we have to contribute. Okay, so currently under the rules for the individual, you are allowed to claim up to 7,000 relief. But this 7,000 split into two. Life insurance premium and the Takafu contribution, 3,000 maximum. And the 4,000 is for the EPF mandatory contribution. So what has been proposed is to encourage the saving for the retirement. Government encourage you to do the voluntary EPF contribution, and they allow you to claim the voluntary EPF contribution as part of the tax relief. I'm going to use one example to go through the impact. So this proposal, first thing first is, it applies to all the taxpayer category, whether you are private sector employees, you are civil servant, or you are self-employed individual. Okay, it applies to all. The yellow color font size is the changes, proposal changes in this round budget. So if you look at the changes, right, what has been proposed is for the existing 4,000 tax relief, which is applicable to the mandatory EPF, if let's say you do have the voluntary EPF contribution, you can claim up to 4,000 together with your mandatory EPF. So of course for self-employed individual, there is no changes because all the while your EPF contribution is voluntary. Okay? And then for the 3,000, they now include that on top of the life insurance and takafu, you also allowed to claim the additional voluntary EPF contribution up to 3,000. This one applicable to all the category of the individual. Okay, so what does that mean arising from this proposal? If currently or in the past you have been maximize your 7,000 tax relief, this proposal does not benefit you, okay, because you have already claimed the top of 7,000. But if you do have you have not really maximized it. For example, your mandatory is only claimed 2,000. You now with this, if you do make the voluntary EPF contribution, you actually can further enhance or maximize this tax relief claim up to 4,000. So it all depends on the individual category to see whether this proposal is benefiting you or not. Then for self-employed, I'm not sure today for our audience we have the self-employed individual. Just one thing that I want to highlight here. Self-employed all the while is voluntary. You met the voluntary, so you actually, in the past, you can claim up to 4,000. Now with this proposal, the wording that they use is additional voluntary EPF contribution. So pending for the further clarification from the tax authority, right now what is not very clear is whether this is only applicable if you have additional EPF contribution. For example, let's say existing, you already met the voluntary EPF, let's say 11%. But your 11% could be 5,000, right? So in the past, you only can claim 4,000. So the question right now is with that 5,000, can you maximize it by claiming the additional 1,000 here? Or the law is saying that if let's say you already met 11% as voluntary, with the proposal, you are required to top up another addition, meaning not only 11, you must top up 11, then only you entitled for this. So at this point of time, it is not exactly clear based on our reading of the finance bill, so need further clarification from the tax authority. So it is just one thing I want to highlight for the self-employed individual category, okay? Then this is the two extension of the tax relief. Very quick one. Currently, for the parents, you are allowed to claim 3,000 per annum for the fee that you paid to the approved childcare center and kindergarten. This 3,000 actually expired this year, 2023. So what has been proposed is they have extended 1 year up to 2024. And another one is the special tax rate where from the company side, Meng Hui had mentioned, the extension of the tax incentive for the entity who relocate their manufacturing operation to Malaysia. So that one is company tax incentive. For the individual, if you are C-suite position employed by that employer, that company, in the past you are allowed, you actually got the incentive is your tax rate is 15%. Whatever the income you earn, maximum 15%. Okay, so that one also expired in 2023. Now the government extend for another year up to 2024. Okay. Okay, then very quick one on the indirect tax. Okay, I think you all we all heard about this so-called the luxury goods tax when the budget is announced. Okay, so the government only made the announcement is okay from now onwards 2023 we want to impose the luxury goods tax, but there is no details given. Okay, in terms of what is considered luxury goods category, and what is the threshold, and what is the percentage for the luxury goods tax. It is no detail at the moment. So the only announcement is they will come up with a list to specify types of luxury goods and the value, meaning the threshold. Okay, so based on our engagement with some of the association or governments, what we heard, okay, there are 4 possible products or goods that could fall under luxury goods tax category. The first category is luxury car. Okay, luxury car. Private jet, If you do have, or you plan to buy the private jet, yacht. So this could be the category, first category. Second category is alcohol. Alcohol. Third category is cigar. And the last category is what we're wearing now from the top to toe. It could be diamond, gold, watches, fashion, cosmetic, shoes. This could be the last category. But there is no value being mentioned. So actually there are a lot of the question is how these luxury goods will be affecting you and me. Because eventually we are the end consumer, we will pay for the luxury good tax. Okay? So and the luxury goods is so subjective. Okay? So for example, if I buy a skirt, 2,000 could be very luxury to me, but 2,000 for handphone maybe is not luxury because the expensive one could cost you like 5,000-6,000, right? Shoes or car, for example, car. What is luxury? A lot of people even own or purchase a car is a luxury already, but to certain group or the individual, probably is only when you purchase more than X amount, like 300,000-400,000, they only consider luxury. So these are the things that still remain uncertain and very subjective. So we have to wait for the list to be released in order to know how exactly this will affect us. Then secondly is, as we know that Malaysia, we don't have the GST, we don't have the consumption tax. Whatever the tax, additional tax imposed by government, it will be the tax on tax cascading effect, because we can't see that. It has been imposed on the manufacturer, it has been imposed on the importer, and eventually you and I, the end consumer, we are paying for all these tax. So they will have that kind of the tax cascading impact. So we don't know whether this luxury goods tax will be implemented at the manufacturer level, retail level, or importer level. So these are still remain uncertain, and we have to wait for the rules to come out. But for sure, it will be under the purview of the Royal Customs Department of Malaysia. And the other industry that very concerned about the luxury goods tax is the tourism industry. Because imagine when the tourists come over to Malaysia and there is a luxury goods tax, definitely the price of the product will be higher. So would that discourage the tourists to come and purchase or not? And whether there would be the reverse claim mechanism like what we implement during the GST. If you are the foreigner, you are a tourist, you purchase exceeding certain amount, the government will then refund the luxury tax to you. Whether this will be implemented again is still don't know. So we have to watch out the latest development, and especially on the date that these luxury goods will be implemented in Malaysia.
So while the government tried to introduce luxury goods tax, right, on including vehicles as well, I mean, we will not run through. These are some of the luxury good tax that is being implemented worldwide and the different type of category. One thing that is also interesting to note is that government is also promoting EV vehicles. And EV vehicles, I think they will be given import duty exemption and also excise duty exemption as well. So the question is whether EV vehicle will now fall under luxury goods tax or it will fall outside. We have yet to see, but with the initiative, it sounded like it may fall outside. So perhaps this could be one of the encouragement to basically buy EV vehicles. Right now, the incentive, import duty and excise duty for CKD and CBU cars for EVs are not yet expired, but the government wanted to extend with a view that, and also to encourage people to basically go into an EV mode vehicle rather than a conventional combustion engine type of vehicle. Hopefully with this also there will be a development of infrastructure in this particular space. Okay, then moving on. Moving on to our last topic, voluntary disclosure program. So voluntary disclosure program, I think as what Linda has alluded to just now earlier in the morning, right? Back then in 2018, income tax basically introduced a special voluntary disclosure program. It was rather successful. The government managed to collect something like 8 billion ringgit. And then after that, customs implemented an amnesty program last year. It was not so successful. There was a bit of a taker, but not what the government wanted. And as part and parcel of some of the things to basically encourage compliance, to encourage taxpayers to come up front and to be more, I would say, compliant to the law and the requirements, right? So the government intends to introduce a particular voluntary program starting for this year for 1 year. But before we go into there, just wanted to just share with you some updates on tax audit and tax audit investigation framework.
Yeah, so we all know that when IRB carry out the tax audit or tax investigation, the objective is to collect more taxes from the taxpayer. So as part of the government initiative for the awareness to the taxpayer, the IRB has been issuing the tax audit framework and tax investigation framework. So these two framework has been updated last year in January this year, and we want to take this opportunity to briefly tell you what are the key changes. So the tax audit framework has been made some changes and issued in May last year, 2022. So one of the key things that we want to highlight is in the tax audit framework, the IRB have actually provide the black and white in terms of the concessionary reduction for the incorrect tax penalty. Very quick one, under the existing law, after the audit and there is any tax adjustment and result into the additional tax liability, then under the law, IRB can impose 100% penalty. How does it work is assuming the tax adjustment, non-deductible expenses, let's say it's 1,000, okay? Additional tax, let's say is 17%. So you have to pay the 170 additional tax penalty, additional tax liability. Under the law, you had to pay the 170 as the penalty. So in total, you pay 340. So under this audit framework, what has been proposed by IRB is, from this year onwards, or after the audit framework, right, they are going to impose the reduced concession penalty based on the number of offenses. So first offense, the penalty rate is 15%. Second offense is 30%. Third offense and subsequent, it will be 45%. So it is not the 100%. And in that framework, interestingly, IRB also give the 0% penalty for any tax adjustment is technical in nature, meaning whatever the tax treatment adopted by taxpayer, which is different from the IRB treatment, if let's say this is because of the tax technical issue, IRB say, okay, I only collect the additional tax liability from you, but I'm not going to collect the penalty from you, meaning zero penalty. So in that framework, they also make it very clear what is not considered technical, because a lot of time the argument between the two parties is, to me this is technical adjustment, but to IRB this is not technical adjustment. You are just negligent for adopting certain treatment. IRB make it very clear, if the IRB have issued public ruling or any document to mention or to spell out the tax treatment for certain transaction, taxpayer decided not to follow those treatment, it will not be considered technical adjustment. Meaning any tax liability arising from the audit, they will impose the penalty based on the number of offenses as per the tax audit framework. And voluntary disclosure, meaning you have not been selected for audit and then you identify the mistake. You do the voluntary disclosure. So there will be the lower penalty, which is 10%. You submit the voluntary disclosure within 6 months from the date that, the due date for the tax return. For example, if for personal, you are supposed to submit your personal tax in April. So say 6 months, if let's say within 6 months, you submit this so-called the voluntary disclosure, they will impose 10% penalty. And very quick one on investigation framework, effective this year, January. What are the insight that we get from the IRB investigation is from this year onwards, it will be the criminal investigation. Okay? Yeah.
Actually, Linda just reminded me, I think we need to file our personal tax return by next month. So better start doing right now. Start going and collect all the receipts. Go and collect all the receipts, whatever you need. So coming back a bit of transfer pricing, right? So for those who are not really familiar with transfer pricing, don't worry. Until now, I still don't really understand what is transfer pricing. Transfer pricing is there but not there. You can see but cannot touch. It's like a cloud like that. You can see but you cannot even capture it. But very briefly, like transfer pricing, it means that, okay, like the word transfer and the word pricing, right? So it means that if, let's say, like we are transacting between related company, whether we are siblings, we are related by blood, or maybe between sister companies, if, let's say, we are all related, technically, according to the legislation, we are supposed to transact as though as we are a third party. So transfer pricing is actually a very, 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 very big area for the inner revenue, and it's actually, I would say, very easy money. So one of the first few changes that they basically introduce is basically 14 days. Within 14 days, you need to basically give, upon request by the IRB, you need to submit your transfer pricing documentation. The transfer pricing documentation will basically enclose all the related party transactions and the reason why you transact at certain prices. Let's just say I sell a property that's worth 1 million, maybe I sell it for 500,000. Question is why? So if you don't submit within 14 days, this is where IRB will come in with taxes and penalty. And the taxes is whatever that they think it is. So to go and defend later on, 14 days is definitely not enough sufficient time for you to even do your transfer pricing documentation. So that is one thing, and all companies in Malaysia will, if they have related party transaction, even if you have a related party loan, that is also considered a related party transaction. Okay, that's one. Second one is that the penalty for transfer pricing compliance has also been increased as well. So as you can see, 20,000 to 100,000 and also imprisonment as well, or both. And one more thing that they basically introduced, right, like for example, just now penalty rate. Penalty rate is a percentage of tax payable. So if let's say there is a percentage, but you multiply with a zero tax payable, sometimes like you can have incentives, or maybe you are having sufficient losses or capital allowances, you're not paying a single dollar of taxes. So if your tax payable is zero, the penalty is academic. Because of all this situation, the Inner Revenue now come up with a new penalty called surcharge. Surcharge up to 5%. So whatever adjustment, let's just say IRB come in and determine that, okay, there's this interest-free loan is not at arm's length, I will charge let's just say a 5% interest rate, okay, the interest come up to maybe 100,000 ringgit. 100,000 ringgit, then according to the law, the IRB can charge a 5% penalty, which is 5,000, even though there is no additional tax payable because of whatever reason. So this is something that is like right now really troubling a lot of our taxpayers. What we can see in practice, Inland Revenue, some of the negotiation, depending on how well your transfer pricing documentations are, we have seen Inland Revenue reduce it all the way from 5 to 2%, 2% or 3% if it's properly well documented and you are able to explain, especially if, let's say, you comply within the 14 days. Okay, so coming back to the voluntary disclosure program, because of all these things that is happening and really to encourage compliance, both Inland Revenue and Customs has already come up together to basically launch this voluntary disclosure program effective from 1st of June. Actually, I do not know why 1st of June. Normally, third quarter, right, 1st July, but okay, I'm not too sure why, but it's 1st of June until 31st of May for 1 year. So those are some of the statistics that were collected back then in 2018 and also the recent by Customs in 2022. It was not so successful, but hopefully with this round, there will be a bit more improved in the compliance requirement by taxpayers. So if let's say, like, for example, there are certain things that you didn't really comply with, or especially, like, for example, for service tax, right, the easiest thing to catch, if, let's say, for example, you're not service tax registered, then when customs come, they will definitely come very hard. So if, let's say, there are things that you didn't comply, do take this opportunity to review your books again, and if, let's say, there are things that needs to be declared, take the opportunity, come clean, and then moving forward, at least then it will not be an added cost to the business. Okay, I think with that, we are at our end of the session, but not yet. I suppose that there's supposed to be a Q&A, and the organizer have actually allocated sufficient, actually plenty of time for Q&A. So we will open up the Q&A to the floors.
We pass back to MC first.
Ladies and gentlemen, okay, first of all, we will let our speakers to have a seat.
Oh, have a seat, okay.
We will now invite Dr. Athanasia Nointin to facilitate the question and answer session. Dr. Athanasia, please.
Still morning. Yes. Good morning once again, everyone, our distinguished participants, and of course our very energetic speakers. Yeah, very happy to have everyone here this morning. I hope all of you are having good time. Yeah, good thing that we are, despite delay in the starting, we are still on time. Yeah, we have about 30 minutes. We put it that we are going to end the Q&A at 11:45. Yeah, this is the second last item in our agenda. Yeah, the last item would be the presentation of memento. So just to align ourselves in the process of the Q&A, yeah, I have actually 3 of my very dear colleagues standing this side, another one this side. I think there are 3 of them, yeah, with the microphones. So in the event that you have any questions, so the one that's nearest to you will go and approach you with the microphone. So you do not need to come over here, yeah? You can just take the microphone from them and ask questions. So the other thing that the expectation of this is, please be concise with your questions. You may provide a little bit of context to your questions, yeah? So that our panel of speakers here can understand your questions. Another one is that the questions that we are going to have is related to the Malaysian 2023 budget. So anything that has been presented this morning, probably if you have any questions regarding to them, or any other things related to the budget that has not been touched and you like to ask, then you can have that question as well. And for the benefit of time, can I have a show of hand? How many of you are having questions? Because I have received some questions that have been forwarded to me earlier, but just to make sure that we have equal opportunities for everyone to ask questions, yeah? So probably a show of hand if you have, just to see how many really have got questions here. Oh, okay, there's one there, and okay, so, okay, that's great, that's great. I hope more, don't be shy, yeah? This is normally how it is in a classroom when I'm teaching in class, but here we have all the adults, and they have another one here. So probably I have these questions that was forwarded to me last night. I was not in time to put them on slides, so I'm just going to read both Meng Hui and Linda. There's no need for introduction now because you have heard from them earlier. You have seen these questions, and probably I'll just read the first question. How does the Malaysian budget 2023 impact SME growth and expansion? That was the first question, and in part I think that was addressed, but probably either Meng Hui or Linda, you want to address this?
Okay, maybe let me take that on.
Right.
For SMEs, right, I think SMEs remain the pillar of the Malaysian business. I think there was a statistic, it was like maybe close to like 70-80% of Malaysian business consists of MSMEs. And a lot of things, and this is where the government also realized, right, for MSMEs, the assistance they are required is not so much tax related. That's the reason why in terms of even the tax threshold, in terms of the tax rate, it was at 600,000 because I think that's where the SME actually operates. What a lot of SME actually requires is a lot of funding. You need the requirement for loans and things like that. So I'm not too sure whether a lot of the SMEs are aware of this, but in the budget, actually year in, year out, right, government do allocate a lot a lot of fund for SME funding. The question is how to find this fund. Normally that is like, again, it's like a cloud, it's there but not there, but you do not know where to go and find. So some of the things, like for example, right, as part of the budget announcement for this year, there was actually an allocation of close to 40 billion to BNM, BSN, and also Tekun in terms of like providing financing facilities. Of course, I mean, I'm not too sure about the rates, but at least these are some of the facilities that's being granted to SMA, these micro and small medium enterprises. There's also an allocation also to BNM, about a 10 billion allocation to BNM to provide financing facility. So I think these are areas where I think SMEs can basically take up the courage to basically go and seek for additional support, additional funding. Hopefully the interest rate will be something that is more palatable compared to currently of what these organizations are basically having.
I hope that has answered the question. By the way, this question came from the member of SME Association of Sabah. I received that from Mr. Lee, the Secretary General. So that was the first question. So for the question number 2, please, can we give that to the gentleman, the third row? Thank you.
Hi, my name is Hugh from. My question is regarding the e-invoicing. Because you did say that, I'm in the palm industry, so you did say that palm industry is going to be affected, because this is exactly what I'm thinking too. So I buy a lot of fruits from the kampong people. So how do you do e-invoicing in that aspect?
Yeah, so actually what you raised was actually one of the practical issues that we have raised. I think there are certain type of transactions that are very difficult to capture under e-invoicing. Like exactly to Hugh's question, right? If let's say, for example, businesses are having transactions with individuals, a lot of time we don't have e-invoicing. What about if let's say, like for example, transactions between individual and corporates, like for example, maybe rental, or maybe like for example, the individual own a shop lot. So those are the things that are not captured. So at this point of time, I think we have posted the question to the government. We have not received any possible feedback, but what I understand is that in certain countries where these transactions are not captured under e-invoicing, there is like, if you remember during GST era, right, there is this thing called a self-invoicing. If let's say you receive invoices from foreign, you have to go and recreate a GST invoice and things like that. So I understand that certain countries around the world, they do the same. So while the invoice that you're going to give to that particular individual could be a physical invoice, you have to like self-create an e-invoice under the system so that it can be captured, and it also can be captured by the inland revenue. So the specific mechanics, I think, that have not been addressed, but that could be one possible way.
Just to add on to what Meng Hui said, based on my conversation with some of the partners in EY, right? Based on our overseas experience, the overseas governments, at that time when they implement this e-invoicing, how do they encourage all the businesses to come into the e-invoicing nets? Is one of the things that the government do is, if let's say you get e-invoicing from your supplier, the government is going to give you like a 5%, 10%, or 15% discount. So as a buyer, you will tend to purchase the goods and services from those suppliers who issue you with the e-invoicing. So that is the force that the government has put in place in order to encourage the businesses to come forward and to implement the e-invoicing. Yeah.
Thank you for that question. I think it really has struck the interest of so many. Yeah. Before I call the audience for other questions, I have here 2 questions on remittance, actually 3, and 2 questions on foreign source income. So I probably will read the question on foreign source income. What is foreign source income exemption, or rather what are the exemptions on foreign source income? And the other one, how does SME report foreign source income? So probably Linda? Yeah.
Okay, so I think in the past in Malaysia, if taxpayer, you receive the foreign source income, and the foreign source income received in Malaysia, you actually enjoy the tax exemption. Okay, so that was in the past. So the latest development is, I think in last year, the government have made the proposal, or now become the law, is foreign source income will be taxable. So the law has been passed and Gazette order has been issued, I think sometime in July. And then there is another guideline issued by the RB in September last year. Okay? So basically the foreign source exemption, the government has given the exemption to individual. If you are individual, you receive foreign source income like foreign interest income, foreign dividend income. It will be, you will continue enjoy the exemption up to 31st December 2026. So whatever the remittance into Malaysia from 1st January 2027 onwards, you will be subject to tax. And as an individual, it will be based on the tax bracket that you are fall into. So what is very important is when you have the foreign source income, it will be only taxable if you remit into Malaysia, meaning you receive it in Malaysia. If your money is always outside Malaysia, you never remit the money back to Malaysia, technically you are not subject to Malaysia tax. And when we talk about receive, right, it's really the actual receive, meaning the money wired into your bank account here. If let's say it is outside Malaysia, the contra payment, it is not considered received in Malaysia. So the money must receive in Malaysia, then subject to Malaysia tax. And then for non-individual, the company, currently the exemption is only for dividend income. So if let's say you are a Sendian Berhad, you have the investment overseas like in Singapore, okay, you receive the dividend income, you can claim for exemption, but there are certain conditions imposed by government in order for you to enjoy the income tax exemption for the foreign source income received in Malaysia for the Sendian Berhad. So the condition including that the dividend income must suffer or must pay tax overseas, meaning the dividend income must be from the income that already subject to tax in Singapore and then pay out as dividend to you as a shareholder. And the so-called the tax, right, must be at 15% and above. Okay, meaning the dividend income is from the profit generated by that Singapore entity, and Singapore entity paid for the 15%. But of course, that one also got the special exemption is if your Singapore entity is suffering the loss, or if your Singapore entity is enjoying certain incentive and not paying tax, that one will also acceptable, meaning when you receive in Malaysia, not subject to tax. Then the last condition is the condition that is, there are a lot of the uncertainty. Because when they issue the guideline, they have, IRB have imposed additional condition, which is you must have a substance requirement. Meaning for the entity, the Singapore entity, you must have minimum number of employees, and you must have a certain amount of the operating expenditure, which at this point of time, they have not really quantified what is the minimum headcount required and what is the minimum operating expenditure required. So these are the exemption available. But for corporate, then you have condition that you have to meet. Yeah.
And maybe if I can just add, right, whatever that Linda just mentioned was just the latest guide. I think as of 2022, there was like 2 changes in terms of the guideline. This is one space that MOF is really looking into it very closely. We are not too sure whether things will change, like for example, just now remittance, right, there must be physical remittance. Question is whether that will it include set off, will it include deemed remittance and things like that. Those are things that we are not too sure how will it develop, but potentially, we could also delve towards that direction. So if let's say like you were to really remit income, I think it's very, foreign income, it's very important for you to also know what is the current position or what's the current law existing at this particular point of time.
What about in terms of, the other one is the reporting. I think there's a question on reporting foreign income sources.
So in terms of reporting, right, actually the reporting of a foreign, the taxes will be for individuals. Actually for companies also, you'll be reported as part and parcel of your income tax returns. First, for companies, when you file your tax return 7 months from year end, for individual by April, that's where then you declare your additional income, and then you just pay the additional taxes at that particular point of time. But also on this point as well, if you're a company or you're a business, right, don't forget for companies, we have this requirement called CP204 for you to pay your taxes in advance. So if, let's say, for example, you were to receive your foreign income, but then you never estimate in your taxes, later on when you file your tax return, your difference is more than 30%, got additional penalties and more. So a lot of things that we do is always penalty, penalty, penalty. I think do constantly speak to your accountant and also your tax agent to make sure that you get out from the penalty regime lah.
Thank you. You want to add to that?
Yeah, I think one of the things that I want to add is for all the foreign source income that you receive in Malaysia and subject to Malaysia tax, right? You actually can claim the tax credit relief in Malaysia. For example, when you receive the dividend income from overseas, for some of the jurisdiction, the overseas tax authority will impose the withholding tax. So the company will pay the withholding tax to the, for example, the Indonesia inland revenue, and then you only get the net amount. Okay, so when you file your personal tax return, for the withholding tax that you suffer in Indonesia, you actually can claim as a credit in Malaysia. But of course, the credit amount will be subject to will be capped at the tax that you're supposed to pay based on the Malaysia tax rate. For example, if let's say for that income, based on the calculation, the tax that you're supposed to pay, let's say is 240 ringgit. But your withholding tax that you suffer in Indonesia is 300. Then the maximum amount you can claim in your Malaysia tax return is 240. So there is a double taxation relief mechanism allowed by the IRB for the tax that you suffer overseas.
Thank you, Linda. I now, I hope that answers that question again from Mr. Lee. I hope it answers. If you have any questions further to that, please just ask. Yeah, and I now open it again to the floor, whether there's anyone wants to ask questions. Oh, gentleman from the other side, please. Or lady, which one first? Okay, that lady there at the last row. Oh, that's my student. Excellent.
Good morning. I would like to ask a question. Sustainability is the focus even in the budget 2023 as double deduction for training courses related to the ESG matters. So what are the examples of training or education courses to encourage more awareness on sustainability?
Did you get that?
Can you repeat your question again?
Sure can. Sustainability is the focus even in budget 2023 as double deduction for training courses related to the ESG matters. What are the examples of the training or education courses to encourage more awareness on sustainability?
Example of education or training to encourage more sustainability. Is Sharon here? Is that it?
Okay, so when we talk about the tax incentive in terms of the double deduction or single deduction, like just now the example, special tax deduction for hotel, I think eventually what is qualified for that incentive will depend on finally what is the gazette order to be issued by the government. So based on what I can recall in terms of the incentives, normally for those gazette order, they will spell out what are the courses. It's either the types of courses and the institution who undertake or who implement that courses. So if let's say you register, you pay for the registration fee for those courses, if fall under the Gazette order incentive, then you should be able to claim the special tax deduction or double deduction. Does it answer your question?
And also, I think also the question is not really specifically tax per se, but at least in the tax environment, in the Malaysia tax environment, there's a lot of initiative trying to introduce the ESG element to it. We are slowly getting there, but not yet. At the same time as well, there's a lot of other initiatives being undertaken by a lot of other different type of agencies, like for example, Bursa Malaysia. Bursa Malaysia has made it mandatory for listed companies to report on their ESG activities. Okay, and also I think there is also like MIA has also come out with their guideline in terms of like some of the ESG type of activities, or even on the tax matters as well. So increasingly, I think ESG is a space that a lot of businesses will need to really slowly venture into. And especially in the palm oil industry, right? If let's say, for example, you have a lot of export to the European country, the European countries are already implementing certain level of ESG, certain level of carbon emissions, certain level of a reporting requirement, and if you do not meet, they will not do businesses with you. So I think it's just a matter of time where then, like to your point, in terms of trying to encourage education level, as things become more aware, I suppose then institutions and organizations around the world will take this particular challenge and instill more ESG type of learning activities.
Thank you. I hope it helps Sharonia and the group of students there. Okay, before I call the floor again, there's another question here. I mentioned earlier that 3 questions related to remittance. Yeah, what is the special program for foreign income remittance? That's the first one. And what does foreign remittance include? What includes foreign remittance? How much tax on remittance after the transitional? Probably the one I can give you later, but probably try to address this too. What does foreign remittance include? And the other one, what is the special program for foreign income remittance? So either one of you, please.
Okay, maybe I start off first, Ming-Hui. I think the program, in last year when the government announced in the budget is foreign source of income is subject to tax, the exemption has been lifted, right? The government have this so-called the special program. So for the foreign source income remitted into Malaysia from 1st January 2022 to 30th June 2022, you are subject to 3% tax rate. Okay, so there is a 6-month lower tax rate, 3%. Then from 1st July 2022 onwards, the tax rate will fall back to the respective tax rate depending on the taxpayer group. For example, if you are SME, you will be subject to 17%. Or if you are non-SME, you're subject to 24%. And for individual, it all depends on your tax bracket category. So that one is for 1st July 2022 onwards.
So Linda is paying 30%.
I'm not paying 30%. We don't lie, professional. We don't lie. I'm not paying 30%.
Anything to add there?
No, I think Linda is covering very well.
I think, yeah, that's great. And any other questions? Oh, great. Please.
Hello. Good morning to all. My name is Edward Chua from Greenworld Corporation. My question will be on this touching our finance minister. I think last year in Parliament announced that the country is going to implement carbon pollution tax. So I don't know whether this has been reflected in 2023 budget tax or not, and whether there's a concrete prescribed activity that what sort of industry, product and services would be subject to this carbon pollution tax. Obviously, the country already moved ahead to establish a voluntary carbon trading platform in Bursa. It's already started. So we'd like to know how this proposed pollution tax, carbon tax, will affect the SME sector in terms of what. And add on to my predecessor asking about ESG impact on the businesses for Malaysia. Of course, these are the new trend sustainability report for future business. So I'm a member of SME. I intend to collaborate with our SME to conduct very soon to conduct an introductory seminar on ESG, how it impact our Sabah business community. And our group is heavily involved in the ESG, sustainability reporting, and we hope that would be shed some light on how this ESG will affect our Sabah business in future. Thank you very much.
Thank you. Very good questions. We have two issues there, I guess. So I give one to yourself and probably to Linda. Yeah.
Okay, carbon tax, the latest development, there is no official announcement when and how government is going to implement the carbon tax in Malaysia. So based on our engagement with the Ministry of Finance, the Datuk Chen Nasri, okay, he is the tax policy head in the MOF department. So she did mention that currently from MOS side, the carbon tax system, or so-called the structure, is already there. Okay, but they have not made any announcement yet. It's because they are still waiting for another ministry office to give them the green light. So this is the verbal that the insight that we have got so far in terms of the carbon tax in Malaysia. Yeah, so there is no detail, like what you said, who and how it will cover, and eventually how it impact the SME and non-SME, we don't know. Okay, but there are some funding being given by the government since the previous budget. I think the 2022 budget, I think there is 1 billion of the fund given to the Busa to help the SME for the ESG initiative. Yeah.
I think Linda has answered both.
Linda has covered both. Okay, great. We don't have much time, so if you want to ask questions, so I think this is your opportunity. We can have it for the next probably 3 minutes. If there's any more questions from the floor, yes, Dato'.
Just make a comment rather than suggestion.
Dato'.
Because the procedures are very clear. You cannot run away from the tax man. Whatever scheme you have today, tomorrow is illegal. So no point cracking our head. So I just want to say that you mentioned the word cost of doing business. In my appeal to the government also, try not to increase the cost of doing business for SMEs, right? And here you have another very elaborate scheme that not only burden the SME in terms of money, but also time to understand, and then also the stress. I remember when Najib time PM introduced GST, a lot of those hawker stores, restaurant, kopitiam, some of them decided that to close a shop because too difficult to handle this GST, and then the penalty is very punitive. So just now you mentioned the percentage of registration SMEs. Based on SME Corp statistics, I think 97 to 98% of all registered business in whole of Malaysia are MSME. Out of this, 76% are micros. Micros means yearly turnover 300,000 and below, and less than 5 workers. Perhaps you can let the tax authority know all these complicated systems. Please exempt the micros, and the small up to a threshold maybe 1 million. You know, can you imagine the nasi kandang? All these still qualify, right? But they had to do all these technical systems. I think with few workers, you barely have time to count your money. Don't talk about trying to comply with all this. So please relay the message on behalf of the MSMEs to your tax board that don't impose all this. You are making us do unproductive work. We should be selling more nasi lemak, selling more nasi kandang, all this. Thank you.
Most welcome.
Thank you.
Thank you. Thank you. In fact, I think just to add on to that comment, right, that is actually a very valid comment. Like during when we were having discussion with the government on the e-invoicing, those were one of the points that we have basically mentioned, and they will be definitely increase in cost of doing business, especially for MSMEs. So I think currently what we understood is that MDEC really take into account this particular matter very, very seriously, especially for implementation of e-invoicing, and they are really looking into how to now help MSMEs to basically, if let's say this will be launched, how to adopt this particular e-invoicing. I think that is one. I think another one is to your point about, sometimes when it comes, it's like it will just go away. But I just wanted to share that I think a lot of this we have actually basically shared it. Another one that we have basically proposed to the government when they implement e-invoicing, right? Maybe for certain companies below certain level of threshold, maybe exempt them from the tax compliance. Maybe we just introduce rather than a tax on the profit, they need to go and do the bookkeeping, this and that. Maybe just do a very simple, small amount of a tax on the turnover to help the SMEs to reduce their cost of compliance requirement as well. And it will also ease the business process, like exactly to what Dato has just mentioned. So these are some of the things that we have basically mentioned to the government, but we are not too sure whether has it been considered or is it going to be adopted. Hopefully, these are things that will be adopted, and we will continue to pass a message to make sure that SME is being taken care of.
Thank you. And the other professor said, we cannot run away from tax. And probably that could conclude, or can, I think we are approaching the time, we have 2 minutes. So we're going to show the, there's no more questions, right? Okay, so this is the key takeaways for today. Yeah, can we have that shown, please? Yes, here. You probably can read this. And has mentioned numerous budget proposals and initiatives were aimed at B40 and MSMEs, so B40s. Government is encouraging more ASG initiatives and high-impact investment, so take note of that. Businesses will need to embrace a digital transformation, we are almost there, with the implementations of e-invoicing, which is very interesting. Taxpayers are encouraged to embrace cooperative compliance policies and good internal controls on tax matters. So that's conclude our question and answer and the event before our next event. So thank you very much.
Thank you. That is the end of the question and answer session.
Thank you.
Thank you, Ms. Linda, Mr. Chua, and Dr. Athanasia. Please take your seats. Ladies and gentlemen, before we proceed to the next agenda, we will allow our stage crew to clear the stage. Ladies and gentlemen, I hope you're still feeling very fresh, okay? But for now, ladies and gentlemen, we will now invite Yang Berbahagia Datuk Chong Hon Len to say a few words to the audience. Yang Berbahagia Datuk Chong, please.
Hello. Okay, sorry I have interrupt again. I always try not to, but since the event, I think performed quite well now, and we actually have about 10 minutes before we end our Q&A. So I asked for 2 minutes, which I think it would not be complete if, as a representative of the House, I don't clarify a few things now. First of all, on behalf of, I just got a question from White Coffee about this. Firstly, I am here on behalf of both INTI and Institute Sinaran. So the first thing I want to let everyone know that INTI and Institute Sinaran has engaged on a strategic alliance as of today to develop the education sectors in Sabah. Okay. So here, I just like to say some thank you words on behalf of the organizer, and maybe also to do a bit of marketing for IS and ICS as well, if you don't mind. First of all, of course, on behalf of the organizer, I'd like to thank the two speakers. I understand that you've flown all the way from KL and you're rushing to go back. But you'll be on good time. I'm sure that they will send you there. But the keywords I want to let you know is that we have been waiting for them to come for almost 4 months. I think today the performance proved that it's worthwhile for the waiting. So thank you very much, both Ms. Linda and Mr. Chua. And even though the session has completed for this morning, I think we still have our Mr. Goh. Datuk Goh, actually, Datuk Goh, sorry. Datuk JB Goh. He's always around us. If any one of you from the industry who need some urgent words of consultation, you can always contact. I hope it's okay, Mr. Goh. So he's one of our very strong supporters. Both his children did very well from IS. I think that's why he is one of our very reliable supporter. Okay, thank you for that. And of course, I like to take this opportunities for the head of the two institutions for supporting this program. None other than Mr. Michael Chin, and Madam Rosalind. Okay, and of course, organizing committee also, headed by our Dr. Sim, and of course Dr. Ann, Angie, and so many of them. I really don't know who got involved. A lot of people. So I just said we thank the working committees as well. Okay. For marketing now. Okay. I'd like to share with you. We have a few more programs being planned. I think one of which is we really like to share with you how Sabah is progressing now. Hopefully we can get some things from the grapevine from Professor Fu to help us to organize the next seminar again. This one we really want to get something from the Sabah perspective, what the Sabah government is doing to help the industry, especially in terms of infrastructures and all this. I did contact some of them, but they say that wait until the midterm budget is ready. So bear in mind, I think we hope to have one event for that sometime in the second half of the year. And also I'd like to share with you that we are organizing a TVET seminar. We managed to get hold of a very senior Sabahan, was 80 plus, but he's in Australia. He is a pioneer, one of the pioneer in develop TVET program. Okay, pioneer that means world-class TVET program. Okay, so we will hope to share this one. This forum is more targeted at the STEM teachers all over the school, but we will be pleased to invite all these key supporters group to share for the sharing. Okay, and also I like to highlight here that I hope both I like to thank Mr. Fong, Mr. Chief, and the three of us are represented at both the BOG and BOD of institutes in Aran, and also INTI, Mr. Fong. Okay, we will be working very hard to get them into one, but these two young people is a little bit naughty, not easy to work them out. So we'll get to that. Okay, but the question asked me is, what are we going to do with all this cost duplication? We will be doing some rationalization. We hope that one will go on, focus on business and art. The other one will be on science and technology. In technology, we are now moving on to TVET. We are introducing a program on mechatronics. Okay, TVET has a very broad spectrum. Ours will be concentrating on TPET, professional and technical education training. The other one is digital TVET. Why digital TVET? I just like to take this opportunity to explain to all of you here. We feel that we in Malaysia, we are always caught, not just Sabah, the whole Malaysia we are caught. We always say that we are trapped in the meager income trap. So the way we think from an educationist point of view, to lift our economy above the middle income gap, especially in today. In the past, we talk about B40, M40, and T20. Now it's slightly B50 or 60, we don't know. And the M probably is about 30. With due respect, I think that the T20 doesn't change that much. The most is T15 now. Mr. Fo will still be in the, most of you here, you'll be still in the T20, okay. But we like to do something for the B40. The way we look at it, if Malaysia do not live up and reduce your B40 to B20, you never achieve the high income gap. Okay? So we think that with the advance of technology together, it is very important for us to develop and train people who work in complementarism to this technology. Either it's AI, robotic, or other field. That will enable a large group of our people to move. I'm not talking about this present generation, actually the next generation, above the B40. And we actually have some CSR program. I don't know Mr. Hill is still here or not. Mr. Hill called 10. Left already. Okay, but he's a member of our board of governors also. We are proposing some joint CSR program to achieve this. This CSR program may not cost you any money, but it's still premature. I'll let him to work it out before we roll it out. Basically, today's, even in Malaysia, money for education is not in short supply. Okay, we got it. But it's not enough for the B40 to come to the city area to attend the education. Okay, so we want to work on this area. There will be some program that we want to roll out. It's a bit premature, but we hope that we'll get you to support it. We allow people like from the industry side, you can actually dedicate this program to your long-term B40 workers, you see, okay, to help the next generation. Okay, so the detail we'll release it to you after over when we are ready now. That's all for the time being. But I like to also take these opportunities on behalf of the organizer to thank each and every one of you here to support this in supporting our forum. Once again, no other word. Thank you again.
Thank you, Yang Berbahagia Datuk Chong. We will now proceed with the presentation of Memento. Once again, onto the stage, we invite Yang Berbahagia Datuk Chong Hon Len, accompanied by Yang Berusaha Mr. Fong Tet Kong, Yang Berusaha Dr. Andrew Sim, Yang Berusaha Mr. Michael Chin, Yang Berusaha Ms. Rosalind Chua, Ms. Angie Chow, and Dr. Athanasia Nointin for the presentation of Memento. Ladies and gentlemen, please. We request everyone in the audience to remain in the hall until the event ends. It will just take a little more while. We request everyone on the stage to take 2 steps to the front, please, so that there will be a little bit of space for all the sponsors later on. Thank you. Ladies and gentlemen, we will now proceed to the presentation of Memento. We greatly appreciate everyone who have contributed time, energy, and resources to ensure the success of our event today. We request everyone later to please remain on the stage, especially the recipients of the mementos, which includes the speakers and the sponsors, because we will be taking a big group photo at the end. We now invite Yang Berbahagia Datuk Chong Hon Len to present a memento to our very first speaker, Ms. Linda Kwang, please. Thank you, Miss Linda. We invite you to please proceed to that side. Yeah, yeah, at the other end. Yes. We now invite Yang Berusaha Mr. Fong Tet Kong to present a memento to our second speaker, Mr. Chua Meng Hui. We now invite our event organizing chairman, Yang Berusaha Dr. Andrew Sim, to present the mementos to all our gracious sponsors. A gentle reminder for all the sponsors to please remain on the stage. We invite Mr. Jackson Fan. Our second sponsor, Yang Berbahagia Professor Dato Fu Ngee Ki. We also invite Mr. James Ha. Next, we invite Mr. Yap Chin Boon. Next, we invite Mr. Vincent Law. Ms. May Ng, on behalf of the Sabah Chongchen Alumni President. Representative. Mr. Brett Chua. Mr. Ng Vui Chuan. Madam Xiao Sui Lan. And Mr. Chow Man Kit. We will now proceed with the photo taking. To join in the group photo, we invite Yang Berusaha Ms. Susie Chong and Yang Berusaha Mr. Lee Chi Fen to join on the stage for the group photo. Yang Berusaha Ms. Susie and Yang Berusaha Mr. Lee, please. To capture the best shot, we will request everyone on the stage to form 2 lines on the first and the third steps. Okay, I will just come to the front here. Yang berusaha Dr. Sim and also everybody in front. First step, please. Yeah, the ground. Yeah, ground. Okay, yes, that we'll form one line. This will just take a little bit, okay? We will take a big group photo after this. Okay, so this is the first line. Okay, keep the second line empty. Okay, good. Right? Okay, I'm going to be checking. Right, 2, 3, 4, 5, 6, 7, 8, 9, 10. No lah, no need. Oh. All right, we request the sponsors to show the mementos. This one's going to the newspaper. All right, can we get one more shot with a thumbs up, please? One more shot with a thumbs up, please. Thumbs up, please. One more, last one. One, two, and three. Thank you, ladies and gentlemen. Please have your seats. Please take your seats. Okay, we will now take one more big group photo with everyone in the auditorium. Please remain calm. Be seated at your own place. We'll be using the auditorium camera and also a panorama shot to take this, okay? All right, we request everyone to have a seat first. We take a big group photo, just one, promise, just one. Okay, so I'll ask the IT to stand by at the PA room over there. And also, we have our camera on standby in front here. Okay, have a seat first. Just one more request, one last request. Yes, thank you. Okay, have a seat, everyone, have a seat. Okay, the camera will be taking from this end all the way to that side, okay? And our auditorium camera can capture the whole place, all right? So have a seat. Let me check. Okay, looks good. All right. Please take the photo. Go. Just in case. No, that is great. Okay. Thank you so much, ladies and gentlemen. We have now reached the end of the Ernst & Young Budget Talk 2023. Your presence is greatly appreciated. Thank you, everybody. Thank you to the sponsors. Thank you to the organizing committees. And thank you for taking the time to attend. We wish everyone a pleasant weekend. Thank you. See you next time.